Did you know that the land down under Australia has not experienced a recession for nearly 30 years? Quite a feat, isn't it? Now you might be wondering, how is this possible? Well, let's delve into the unique aspects of the Australian economy and its incredible resilience. The Australian economy is like a well-crafted boomerang, always returning strong. One of the key factors contributing to this is Australia's abundant natural resources. The country is rich in coal, iron ore, copper, gold, natural gas, and renewable energy sources. These resources play a significant role in driving the economy, with Australia being one of the world's leading exporters of minerals and energy. But it's not just about what's in the ground. Australia's strong policy frameworks and sound financial system have been instrumental in maintaining its economic resilience. The country's policymakers have consistently demonstrated a commitment to structural reforms, fiscal responsibility, and a flexible exchange rate regime. This has helped Australia weather global economic shocks and maintain steady growth. Moreover, Australia's financial system, characterized by a well-regulated banking sector and a proactive central bank, the Reserve Bank of Australia, has ensured stability. The financial system has adeptly managed risk and absorbed shocks, contributing to the overall resilience of the economy. However, the land down under is not an economic utopia. Like any other economy, it faces its own set of challenges. A key issue it grapples with today is inflation. But as with any challenge, Australia is prepared to tackle it head-on. After all, this is a country that hasn't seen a recession in nearly 30 years, so let's explore this further in the next scene. But as with any economy, Australia is not without its challenges. One of the most pressing issues it faces today is inflation. Inflation, the economic boogeyman, is back in Australia, and it's causing quite a stir. This invisible force is subtly eating into the value of money, making everyday goods and services more expensive. But what's causing this rise in inflation? Well, there are a few culprits. First up, we have the rising fuel prices. Like many other countries, Australia has been hit by the global surge in energy costs. This affects not just the price at the pump, but the cost of goods too. Why? Because transport is a significant part of the cost of goods, from the food on our tables to the clothes on our back. When fuel prices spike, the costs are passed on to the consumers, stoking the fires of inflation. Next, we have the red-hot housing market. Record low interest rates have fueled a housing boom, sending property prices soaring. This is great news if you're selling a house, but not so good if you're trying to buy one. As home prices rise, so does the cost of living, especially in major cities. This has led some analysts to predict a slowdown in price growth in the coming years. But for now, the high cost of housing is another factor pushing inflation upwards. Inflation doesn't just affect the cost of goods and services, it also hits the value of money stashed away in savings accounts. As prices rise, the purchasing power of savings diminishes. This is a particular concern for retirees and those on fixed incomes, who can't easily adjust their income to keep up with rising prices. But it's not all doom and gloom. A certain level of inflation is actually a sign of a healthy economy. It suggests that demand is strong, which can stimulate economic growth. The trick is to keep inflation in check so that it doesn't get out of hand. The Reserve Bank of Australia is not sitting idle in the face of rising inflation. They have plans to combat it, and we'll delve into those plans in our next segment, so stick around. The Reserve Bank of Australia, the country's central bank, has a plan to combat rising inflation, and it's already in motion. The Reserve Bank of Australia, or RBA, is expected to take some crucial steps to tackle the mounting inflation pressure. High on their agenda is the potential increase in interest rates. This could be as early as the first quarter of 2023, a shift from previous expectations and a significant move that could profoundly impact the economy. According to economists, we could see at least one rate hike by the end of the first quarter, followed by another in the second quarter of the same year. This strategy is hinged on the RBA's latest forecasts, which show core inflation reaching 2.5% and wage growth at 3% over 2023. These are essential parameters for rate hikes. However, it's worth noting that wage growth could reach these levels sooner than expected. An interesting point is that unlike the Reserve Bank of New Zealand, the RBA has not yet addressed the rising house price inflation. This could be a part of their response strategy, considering the housing boom fueled by the RBA's stimulus measures and record low interest rates. The Australian economy is a complex machine, and it's in the hands of some of the best economists and policymakers in the world. No doubt they will navigate these troubled waters with skill and precision. Before we wrap up, a quick reminder. Your support is what fuels this channel. So if you found this content insightful, do consider hitting that subscribe button. It's just a click for you, but it means the world to us. And we'd love to hear your thoughts too. Got an opinion on the Australian economy or insights into its challenges? Do drop a comment below. Your engagement helps us produce more quality content. Thank you for watching. Remember, your engagement helps us produce more quality content. Don't forget to like, share, subscribe, and leave a comment on what you think about the Australian economy and its challenges. Until next time.